Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Egon van Greyerts of Matterhorn Asset Management in Switzerland. Egon, welcome back to the Keiser Report.
Thank you very much, Max. It's a great time to be here. It's great from the point of view that we have so much to talk about. It's not great for the world, sadly. But
yeah, well, let's get into it. I wanted to start off by asking you about what's happening in France, because in France, they are limiting people in terms of how much money they can take out at the bank at one time. They've limited to 1,000 euros. It was like 2,000 or 3,000 euros. They're getting very involved in people's day-to-day business, how they're spending money. You can't spend a certain amount of money without alerting the authorities. You can't take out more than 10,000 euros a month without alerting the authorities. It seems to me that France knows that 0% interest rates are coming, that they're going to start charging people to keep their money at the bank, and they don't want people taking that money out of the bank and sticking it into your vaults in Switzerland or even into cash and putting it into the bank. Isn't this a pernicious form of capital controls? And talk about this a little bit.
absolutely, we will have worldwide capital controls. You know, right today you're a criminal if you go to the bank and ask for cash. Most banks in the world ask you a lot of questions, and if you want a bigger amount, they will stop you. Although it's actually not illegal in most countries to take out bigger amounts, but still, they will do everything they can to stop you. The banks are in a mess. France is the next sick child of Europe, in my view. They will have massive problems, and exchange controls will be part of their solution. It's not a solution, of course.
So in other words, you've got in Europe countries going bust. Obviously, Greece has gone bust. As Yanis Varoufakis has said, we're bust. So there's no point in talking about what we do if we go bust. We're already bust.
Absolutely.
In Italy, it's a terrible situation. Ireland went bust. They got bailed out, but now it looks like they're going to go bust again because there's a housing bubble. Yeah. But you think France, now this contagion, if you will, is going to hit France. Talk about this a little.
Yeah, no, I think the French economy, I mean, their deficit is among the biggest in Europe still. They have unions which are not going to accept any austerity, and France will have austerity like any country needs to in a deficit situation. You look at Greece, Italy, but no country will accept, no people, including the French especially, will accept austerity. Therefore, I see the problems being bigger in France than anywhere else, because they will actually have unions that are going to just stop all activity. I forecast a long time ago that every country, certainly in Europe, will change governments regularly now, because any new government that comes in promises the earth. They can't keep it. Look at Greece now. Either they're going to compromise or they have to leave the EU. I think they should leave the EU, default, install a new currency, the drachma, start from fresh again. But of course, the Troika will do everything they can to stop them, because they know that it will lead to Italy, Spain, Portugal asking for the same conditions, if they actually, or either asking for the same conditions, or also starting to have financial collapse in their country. So I think that we will now see parties coming in and out on a regular basis in Europe, and no party will last, because they promise the earth when they come in, and when they come in they can't deliver, they'll be thrown out, and therefore we will have a form of anarchy starting in politics, because politicians will not ever be able to rule the country properly.
Now, in the case of Greece, the folks in Greece, they want two things. They want to be part of the euro, and they want the end of austerity. It seems like these two goals are mutually exclusive. Either you want the end of austerity, or you want to be part of the euro. You can't have both.
Yeah.
Is that a fair statement?
It's fair, and this is what has happened to Europe today, that people are used to being spoon-fed by the government and looked after totally. So they want everything, but they don't want any austerity. Of course, we know the two will never reconcile. Greece is bust, as you said. All of Europe is bust, certainly Southern Europe. Therefore, in my view, there is no solution. Of course there isn't any solution. They they will find a compromise short term, but long term, I mean, the whole, in my view, and I said it when it started, the European Union will break up. The euro is an artificial currency that should never have been there. it won't last. It's only a question if some countries will still have it for a while.
Now, Egon, you're at Gold Switzerland,
Yeah.
is the company. You're in Switzerland. And the business model is a very interesting business model because basically you can sit back and just wait, because throughout history, every fiat currency that's ever come has ended in disaster and worth nothing. And throughout history, gold has always been the currency at the end of the day. Gold, we always come back to gold. So basically, you have Gold Switzerland in Switzerland. Right now, there's a love affair with fiat again, whether it's the euro or the dollar was, making a move much higher. But aren't we in a very strange situation where the supply of dollars, the supply of treasury paper is at an all-time high, and yet the price goes up, whereas the demand for gold globally is one of the strongest periods in history, and the price has been trending sideways to lower. Doesn't that repudiate everything we know about economics?
Yeah, you're making a lot of important points here. First of all, the demand for physical gold is very high, and there's actually a shortage in the market of physical gold. Now, because what has happened, as you know, is that all the gold goes from west to east. Before, when bullion banks got gold from central banks, leased gold or sold gold, is kept within the London pool or in New York. Now, China is the buyer, and they take delivery. So that the physical gold market is now strained. But the paper gold market is, of course, 100 times the physical, and therefore the governments of central banks and some financial institutions, the big banks in the U.S., Goldman's, JP Morgan, etc., they are manipulating the price and pushing it down continuously. That's going to probably end this year, in my view, and when the market sees that there actually is no gold to deliver against the paper longs, they are going to go. These banks are not going to be able to deliver. They will actually have to cash settle, and they will lose a lot of money.
Okay, first of all, let me jump in and say you're calling for a gold breakout and a breakdown in paper currencies this year, 2015, and your track record in this regard is quite stellar. You're not making this prediction lightly. I mean, this is coming from somebody who's really at the nexus of the global gold market. And so your thought is that this year we do have this reversion to the mean, this sudden re-evaluation on the global scale where fiat currency resumes its natural value, which is not very much at all. And we have this gold then coming back and assuming its mantle as the top currency. What's going on with the top 1/10 of 1%? It seems to me that once they're flirting with these fiat currencies, the high-tech stocks and the New York Stock Exchange, et cetera. But once the psychology changes, they can very quickly get into gold, and those who are left on the sidelines will be out of luck.
Absolutely. And especially the first ones will be the ones who hold the ETFs, hold the paper gold. They won't get any gold. If you have good connections, because remember, there's about 2,500 tons produced every year. And if you buy direct from refiners, which we do, you will always get gold. But there won't be gold for the masses. I mean, I can see now, I'm in the hyperinflationary camp. I believe that you look at the money printing, and let us just look at the money printing now. Japan, in my view, Japan is going to the country will survive, but the economy will sink into the Pacific. They are not going to survive. There's no chance of it. 250% debt to GDP now, growing, printing, a trillion or quadrillion yen debt going up, no effect on the economy. China, as you know, has gone from 2 trillion to 28 trillion, their borrowings in this century. They will have problems, and they have problems already. And of course, that has repercussions for the whole world because they were buying all the commodities from the world. Now we know commodities are crashing, and the Baltic Dry Index, which is a good example of actually what's happening in world trade, is at an all-time low. So, we talk about Europe as the only problem child, but I see the US as the big problem. The US, everybody's now optimistic, dollar has been strong, the US economy is strong. Every single figure is actually now worse than expected. in the U.S. Stock markets are the Russell 2000 is on a 90 historic PE. But everybody looks at future PE and they exclude all the items there. So they talk about lower PE. The real PE is 90. The S&P's on historic basis for last year, the last 12 months, is over 20.
When companies buy back their own stock, doesn't that totally distort PE? Because they're taking away less.
This is why they're doing it.
Right, so they get 0% interest rates to borrow money at zero.
Absolutely.
They buy back their own stock.
Absolutely.
So there's less stock around.
Yeah.
So now earnings look better because it's divided by less stock.
Yeah.
And they say our PE is not that bad.
Yeah.
But you're saying if you take out the gimmicks, you take out the junk, you end up with a 90 PE
on the Russell 2000.
on the Russell 2000, which is the broadest measure of the index.
On the last 12 months.
Which is really freaking high.
Gap.
Is that high? That's higher than Matterhorn. Matterhorn.
It is higher than Matterhorn. That's an achievement.
Unbelievable. We have to go. But we're going to come back for part 2 if you can stay with us.
Yeah, okay, I can stay.
Okay.